Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Wednesday, March 22nd, 2017, and this is the Daily Report for gold and silver. Now going on its sixth consecutive day, the gold rally continues, although today's rise is nowhere near as dramatic as we have seen recently, but we do have a positive upside close. First, to most active gold futures. This, of course, is based on the April contract, closing up about $2 on the day at $12.4850. The low on the day has been $12.43 and change, with a high of $12.51. The high is something we will want to take a look at when we look at current resistance levels. If we carry that over, because we are in a current trade, and that trade is based upon the June contract, as you can see, we're at $12.51. Up about $1.40 on the day, low 46 and the high 54.60. Of course, we went long at 12.37. We have stops below that. Obviously, we want to maintain our current long position as well as to maintain our stop on the day. Spot gold, again, nice change to the upside, trading up about $4 on the day at $12.48, in line with most active April futures. Now, the net gain, a little over 1/3%, but when we take a look at silver, recently silver has not been able to capture that safe haven kind of demand, and especially with equities under pressure, although they really came back today, the industrial component to silver has kind of been taken out of the market. So we do have silver trading lower, off about 4 cents on the day at $17.54, the low 46, and the high 17.60. First chart that I do want to look at today is a daily chart, but in Japanese average format, this of most active April COMEX futures contract. The reason for pulling this chart up first is I'm trying to ascertain the current strength of our existing rally and trend. And one thing that these charts do really, I believe, better than any other chart is filter out much of the noise that you get, so you can get a very, very pristine picture or illustration as to the strength of the trend. Take this downtrend, for example, coming off of the all-time high this year at about 1260. We had a kind of a flurry of large green candles, capping it off until we had that pivot candle, the doji. We then went to red. We have a very, very small tail here, but aside from that, we had a complete absence of upper wicks up until we started to get these pivotal candles. We got 3 of them in the case of this bottom, just coming in before the beginning of last week's FOMC meeting. And body size is still relatively pretty good. Now, you'll see when we convert it to a standard candlestick chart that the daily ranges have been contracting and the daily gains have been contracting. But when we average them out through this kind of a chart, we still have the absence of the lower wick coming into today. We have good body size, and that indicates, at least on a technical basis, that there is still some real steam left in this particular rally. However, the real caveat to my last statement was on a technical basis, because we know that this market has been fueled by fundamental data, and it reacts as this data changes day by day, in some cases hour by hour. And the key right now is the referendum vote coming up tomorrow, in which they will vote to replace and repeal the Health Care Act. And the importance of that is not only the future of our national health care system moving forward, but more importantly, it is really the first test of this new administration's ability to convert campaign pledges and promises into reality. Because much of the most recent equities rally has been based upon the optimism that he can deliver on his words, and that he can lower taxes, create huge infrastructure projects, revamp the regulatory structure and regulations, do something about Obamacare. And so this is really the first time we're going to see whether or not he is able to deliver on his promises, because if he cannot, we could see a continuation of the Dow Jones and U.S. equities, as we saw yesterday, really falling out of bed and dropping hard. But traders, the opposite is also true, in that if they're able to replace and repeal and replace the Affordable Health Care Act that is currently in place, then it shows that Trump was able to deliver on a campaign promise. And the optimism, which has been based upon belief but not facts, will have gotten a much stronger boost, and we could see a returned or a renewed leg to the upside move in not only U.S. equities, but we could see the dollar move higher, and we would see gold come under pressure. A mixed bag in U.S. equities today, with both the S&P and the NASDAQ closing higher on the day. Dow Jones, in essence, closing unchanged to a fractionally lower on the day, 20,661. That's the Dow Jones Industrial Averages. You can see a fractional change on the day. But what is most noteworthy about this move is the quick and decisive recovery since yesterday's dramatic triple-digit sell-off. Of course, all eyes and all market participants will look closely as to the referendum vote tomorrow on repealing and replacing the Affordable Health Care Act, and whether or not Trump can deliver on his campaign promises, as this is truly his first test in putting pen to paper, so to speak. Now, NASDAQ actually did the best of the indexes, trading up about, let's pull it up first, but trading up about 0.5% on the day, as you can see at 58.21. That's a 28-point gain, and that far overwhelmed the Standard & Poor's, which also gained on the day, but not as nearly as significant, about 0.2% with the Standard & Poor's. Crude oil, although the drop is beginning to slow down, as you can see, we are lower, but we are fractionally lower, but trading just above $48 per barrel. And most importantly, of real interest is the U.S. dollar, because it started with short covering with gold, but it has been safe haven buying and buying of gold plus a weak U.S. dollar that combined has contributed to this now a week-long rally in gold. U.S. dollar below 100 at 99.67. Quite a resilient recovery in U.S. equities markets, that following the greatest single-day drawdown since the presidential elections were held in November of last year. That's right here. If you look at how this market has risen since Donald Trump became president, you've got large green candles, you get sideways moves, but when you look at a red candle in terms of the length, meaning the drawdown itself on any given day, yes, we have some lower days, but nothing like the size of the candle we saw yesterday, with the market trading off by about 237 points. Now, on this daily chart, we have our 50-day moving average. We're still trading well above that. If you recall from yesterday's report, I spoke about the fact that if we see continued downside pressure, roughly 20,400 is going to be the first place we would want to look at for support. However, everything's going to kind of be in limbo right now until we get an indication of the outcome of tomorrow's vote. And traders, even with the nominal fractionally lower pricing in the Dow, when we look at the NASDAQ, the tech-heavy index, we can see that it had a pretty solid day, gaining about 0.5%. And that, of course, after this hard drop yesterday, in which we saw a tremendous amount of value come out of the index, we have seen a nice recovery. And once again, we would want to look at this particular 50-day moving average in terms of ultimate levels of support should the market continue under pressure. Again, it's all about tomorrow's vote. And lastly, I do want to take a look at the dollar index. Now, the dollar index was lower today, off a little over 0.1%, 99.69. That is where it is currently trading. However, in terms of the actual break out that we saw as the market broke to the downside and broke through these channel lines the other day, we have actually come to an area in which, on a technical basis, there is a case for support in the market. And I draw your attention to this straight horizontal trend line that I've added. It's simply fixed to the bottom or the low that was achieved in today's trading session. It quite eloquently lines up with these series of tops here, very, very loosely to this top right in here. And so on a technical basis, there can be a case for finding support between this area and then this low at about 99.25. But again, I think that we're going to see a subdued, quiet trading day tomorrow, and the reaction that we will see will come as the vote comes out and results are known. So traders, we absolutely need to pay close attention to tomorrow's vote. If that vote does pass, we could see some real pressure come into the precious metals market, specifically gold. We would want to cover and take what profits were left there. If that vote does not pass, we should see a continuation of the rally that began a week ago Wednesday. So my recommendation is to maintain our current long position and to maintain our current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.